Mahindra and Mahindra, and what a stock it's been. Great turnaround. The uptrend continues, and for the quarter gone by, also numbers are indicating that there is no iota of slowdown. Rajesh Jejurikar joins us, Executive Director, CEO Auto, and the farm sector. Good morning. Thank you for joining us. I have, let me count, 1, 2, 3.
Let me summarize. Picture perfect number.
Six reports.
Can't find a
I
fault.
didn't realize that you needed so much paper.
6 reports, 6 reports, and all of them are in the sense saying that the quarter gone by was good. Growth in the SUV business continues, but the order book has come down. That's one underlined fact which everybody is saying. Why has that happened? How should one read into it? And was that a one-off?
Nikunj, firstly, we had good growth in SUVs. We had said this year will be mid to high teens, and right now quarter one was 24% growth. When we had too much waiting period and too much of an order book, the question was why are we not solving for that? We've solved for that. So we did want bookings to come down, and we did want retails to go up, and they've gone up from 18,000 now to 41 odd thousand, whatever level that we did last month in June. The July numbers will come out a little later in the day. So in today's market environment, unless we have something which is really dramatic and new, I don't think customers are going to be wanting to wait. So we have to be able to give a product at a reasonable time. Otherwise, customers are going to buy something else. I mean, I don't think anyone wants to wait 4 months or 5 months in today's context. So in a way, we're happy to have brought the order book down. The challenge, of course, is to keep the retail momentum on. 3XO we launched in April, and it's done really well. We have a new launch coming up later in this month, which is the Thar Rocks, and we're quite excited about that too. So, both of these will bring new energy into our portfolio.
Okay, so SUV is growing at a rate which is higher than the industry average. That's an established fact now, and Mahindra is benefiting disproportionately because of that. But within the SUV, because competition has intensified and base effect is higher, do you think that there could be a flat line of growth, or this J curve will continue?
You mean for the industry?
Yeah, for the industry.
Yeah, so firstly, SUVs today is now more than 60% of the passenger vehicle market, so it's mainstream. We do expect SUV even for the industry to grow faster than the passenger vehicle industry, which is the rest of the market. So maybe, it'll be single digit growth is our sense for the industry for SUVs, lower than that for the passenger vehicles for the year. This was also the forecast that SIAM had put out earlier for the year. And because we have a couple of new launches and the differentiation of our brand, we are hoping to grow mid to high teens. So we hope to continue gaining market share. SUV as an industry will grow faster than passenger vehicles and at a slower rate than earlier because of the base effect, as you said.
But Rajesh, if the demand is so robust, then why the recent spate of discounts, and not just you, pretty much across the industry?
No, so we are not discounting heavily. We've taken a specific intervention on XUV 700, and I can spend a couple of minutes if you like on explaining why we're doing what we're doing. And it's not something that we did as a knee-jerk thing. If you go back to our February earnings call update, we at that point of time said that XUV 700 does need more accessible price points. Because 70 to 75% of the bookings and hence the sale that we had got on XUV 700 was for the top two variants, which was very good news at that point of time. But the top two variants had reached an ex-showroom price of between 23 to 25 lakhs, which means 30 lakhs on road. Now, we're not going to get growth at 30 lakh on road price. That's not our segment. It's great to be in 18 to 25. And that's where the brand has moved a lot, but not 30 lakhs on road. We hence had said that we have to make the brand more accessible. The strategy has to have the right triangulation of how much growth you want, how much margin, and how you're managing things like market share, right? So in XUV 700, we had a specific benefit that we used to have a very high chip semiconductor content, more than 240 chips. The prices of those had gone up dramatically because we were buying at market premiums for almost 2 years. That's all gone. right? So we have the benefit of that. We have the benefit of value engineering. We've now increased capacity. So we should try to drive growth by getting the right price points. And we're already seeing the impact of that in July bookings over June, which went up by 40%, because the brand has a lot of strength, but we've always said that we would be very mindful of the right sweet spot price for customers, and we shouldn't get so greedy that we just want to increase margin on a product, but you kind of lose the growth opportunity.
Sure. But is that going to be a conscious strategy now? Affordable SUVs as opposed to the premium segment?
Our strategy is always, Aisha, been affordable, getting the right price points, give the customers a lot of value so they want to buy us. So when we launched XUV 700, it was that, and we then, because of multiple reasons, including the chip costs going up and a huge commodity inflation, we almost taken 3.8 to 4 lakhs price increase over 3 years, which is a lot of price increase. It was necessary to do it because we were paying a lot of premium to pick up by chips. When that has gone, it's fair that we pass the benefit on to customers and try and make the brand more accessible. It's not like we want to sell cheap. Even at 22 lakhs, customers should feel like they got a really good deal.
Value for money, yeah.
We've been hearing about this rural recovery as well across the board, and when it comes to the farm equipment segment, you are talking about seeing some green shoots. What would be a fair guidance? What are the growth triggers here?
The tractor market has gone through a difficult last year. -7 was the industry for last year. Q1 was -1. We had a growth of 5% because we gained market share. We're seeing some very positive green shoots. So just quickly to recap on that, the rains have been very good in most parts of the country except 2 or 3 states towards the east and some part of north, but west and south, which was really bad last year, has been very good. The terms of trade, which is the price that the farmer is able to realize compared to the input cost, has kept getting better. We also have something we call the rural spend index, and we've seen that correlate very well with tractor sales in the past. And there's a mean point above which, when it goes, we start seeing tractor sales come up. This is a combination of what state government spends and central government spends on rural and agriculture. We've seen that move up too. So a combination of these makes us believe that there will be a recovery in the second half. At this point, we're not changing our full year forecast, which was at 5%. But we'll look at that in the next 2 to 3 months. But clearly there is a rural recovery that we're seeing.
So let me start putting the blocks for the second half of this year. One is the Thar 5-door launch. That's one. Second is the tractor upside which could come in. Hopefully. You've been conservative right now, but realistically monsoons are great. There is some upside which could come in. And third is the backlog of XU 3XO. You put all these 3 things together and add the linear growth in SUV. Can I say then the second half will be better than the first half?
For our volumes, you mean the absolute volumes in second half should be better than the first half anyway. Q1 is normally not a big volume. Second half has the festival season as well. Plus, like you said, we would have the effect of Thar Rocks, which would basically get to normal volume in the second half, because by the time we launch it, ramp it up, start supplying, we'll really see the effect of that in the second half. So yes.
Which way is the SUV market moving? I'm trying to understand that you've said that, look, you do not want to go above the threshold of 30 lakhs. But what you've done is that you've got a Thar somewhere sitting in the center, and then you got a new version of XUV 300 which came a quarter ago. Is the SUV market in India for a manufacturer like Mahindra & Mahindra going down in terms of affordability and mass, or it will still be this aspiration, inspiration and brand which will drive it?
So in every segment we play, we would like to be differentiated and make sure we have something significant to offer. And 3XO is a good example of how we played that out. So if you look at the 3XO range of price that we have, it starts from 7.5 lakhs and goes up to 15.5 lakhs. So we're actually playing in multiple segments. So the way we thought about it is there's some part of the 3XO portfolio which should appeal to first-time buyers. There's a top end of the 3XO which has everything, which has the Harman Kardon system, soft touch, trims, ADAS, and all the stuff that you would want. And there is a segment for that. So the segment for that are, I'm just naming two. One is our parents who want everything but don't want a big car, because either they want the flexibility to be able to maneuver and drive it themselves, or they just want compactness because the distances that they're using are not a lot, but you do want to get the best in that size for your parents as older people. And that's the segment, and we're seeing lots of people we talk to say 700 is too big for them, stepping in height, so on and so forth, but we want everything that a 700 has for them at in a smaller size. So you have that segment. Then there are many women drivers who again don't want necessarily a very big vehicle. It should be easy to park and you should be a buyer of that. But money is not the constraint. You want a vehicle of a certain size, and then you have a product for them at 15-16 lakhs. So, so we are actually able to play with a product like 3XO across a wide range of segmentation. We have 25% first-time buyers, first-time car buyers in 3XO. So, we've got people coming in from hatch, 20-25%, 20-25% coming in from as first-time buyers, and there are anecdotes and photographs that we see of customers coming in, 17 people to take a delivery. It's the first time. It's the first time the families. That's India. The first time that the car coming into the family. It's such an emotional moment. 17 people come to take the delivery of your car.
And the natural curve has changed. I mean, how did I migrate from cycle to motorcycle to a small car to God's been kind, you can afford an SUV now. But I can straight away see that the jump is to the SUV. You are just skipping that entire scale of evolution. I mean, that's something which has really changed. Yeah. My next question is that your margins are at the upper end now in terms of what you've demonstrated, and these are good margins. Shareholders should be very happy, investors should be very happy. But the tailwind for margin was largely coming because of new launches and the price hike which you took. The fact that you've taken a price cut and you want to maintain that affordability factor, where will margin sustainability come from? Will it be a function of productivity and raw material, or you still have pricing power with you?
It's a hard question to answer, Nikunj, because let's set some principles around how we think about it. Margin and growth is a constant push and a pull. And it has to be calibrated on the go. I mean, you can't say it's only going to be margin, and you can't say it's only going to be growth. So we've got to trade off both of these appropriately based on how the market situation is, and the center point of it has to be the customer. So we have to do what we believe is right for the customer by way of getting the right price points to them. Then the rest of the organization has to work on seeing how we're going to manage costs, operating leverage, all of that to make sure that we can still deliver very good margins. When we launched 3XO and people saw the price at which we launched it, they said, you guys are going to bleed margin. We didn't. Because there's a whole organization ecosystem that is working on managing overall cost structure and material costs, so that we are able to give customers value. And when you get then to a certain level of volume, which is now very healthy on 3XO, you actually end up pushing the margin up. So even in the case of the 700 and the pricing action we've taken, it's bringing customers back into our higher end. Because even though we've launched an AX5 at Select, which we did a few months back, which was at a very attractive price, and we added a panoramic sunroof to that. Now when that brings customers walking into the showroom, but then they see AX7, and you're suddenly getting your mix back to AX7, AX7L. So, while it may seem like you've cut prices, but actually you're improving the margin profile. And hence the mix profile moving to the higher end version, which improves the margin profile. So which is why we're saying we don't really see a financial impact or major negative financial impact out of this, because we'll get higher volumes, get a better mix, all of that in XUV700.
What we get to know is the blended margins, but I'm sure every model has a different margin.
And every variant.
And every variant. Wow. So how does it work for you? I mean, for us to understand that which way things are moving for you, which variant is like the Apple for you, Apple iPhone for you, which variant is like the routine iPad for you, which sells but does not give that much money to Apple. How does it work for you?
I don't know the Apple margin profile, so it's hard
so
for
me to
compare.
So let's talk about you. You are Mahindra and Mahindra.
Top of the curve. Let's just put it at that.
It is Nikunj, a question of managing a portfolio of mix. So you have, you have to have some products in your portfolio which are volume drivers. Then you have a portfolio in the product which are new products which need time to settle in, and you want to keep them at a very good price point till you get enough vehicles on road, you build word of mouth around it. So you have that. And then you have those brands which are, have settled in, customers, have a very positive view of it, and you have a headroom to take price increase. And we did that on XUV700. But some of that was necessitated because of an increase in cost. And when that cost has gone away, you do want to bring back your ability to price the product well. So, the temptation always when you have a cost increase followed by a cost decrease is to hold your price point. And sometimes you can because the customer still thinks it's great value. In the case of XUV700, if we had not corrected AX7, AX7L, the customer would have moved to the lower variants, which is not really beneficial to us. So you still do want to keep your higher variants, as your attractive sweet spot prices. And in a way, that's the way you would do it. So, when we're doing Thar Rocks, it's a new product, and we always say that new products we will price in a manner that, brings us customers to try out the new product.
What about the strategy on the EV mix? Because, since we've come out of COVID, lots has changed, and just about every company is now expanding their EV portfolio.
So the question is, what about?
No, the question is, what about your EV portfolio? Are you going to also have a larger mix when it comes to EVs as opposed to ICE engines?
Yeah, it won't be larger than ICE clearly in the short run, but we've been saying is by 2027 we would like 20 to 30% of our SUVs to be EV. And we've created some really wow products, and you may have seen visuals of that, but you would start seeing them on the road in 2025. And we believe that they'll touch an emotional chord with customers. They're really high tech and very good, very, very good feature offerings, and the drive experience because it's electric is going to be amazing. So we think they will do well. They're more linked to what car buying is about, which is the passion around wanting to own something, less to the economics of electric.
So, the jury is not out. I look at China, EV is like 30-35% of the market share.
Yeah.
Every time we've spoken to your peers also and some auto experts in India, they are of the view that the hybrid, the ICE and the EV would coexist.
Yeah.
But how do you see companies like y'all evolving? Because you'll have to spend now in 3 platforms. You have to create a hybrid, you have to create an EV, you have to maintain leadership in ICE.
Yeah.
It's a very evolving situation.
Yeah, fortunately the market is growing. Okay. So that's overall good news. We're not in a stagnant market like in many Western world countries where the size of the pie is not growing. The size of the pie in India is going to keep growing. So if I was to break it into what's happening on ICE and EV, in the ICE world we have already invested in platforms. We have some very good diesel and gasoline engines. We don't need to invest in that anymore. All we need to do now is to create new derivative top hats on existing platforms. So that brings the need for big investments in ICE down a lot for us. So that's why when you see our numbers, we don't need to invest as much in ICE because we've done that over the last 3, 4, 5 years. Now we're just talking about creating new products.
But your capex for auto is very large. I mean, I was looking at the comments of Anish.
Is that a positive or a...
No, I'm saying that if you're not investing in ICE, then where are you investing?
Yes, no, I didn't say we're not investing in ICE. I'm saying relative to the fact that still 70% of our volumes will come from ICE, we don't need to invest as much.
Okay,
but in EV, we're creating the platforms for the first time. Right, so in a way we did that in the ICE world over the last 4 or 5 years. We created new platforms, new aggregates, and everything that has made our product successful today. We need to do that in EV. So it's a upfront investment that we're doing in creating the platform, the manufacturing capacities, the cell module and the cell pack manufacturing. So all of this is new investment. In future we will ride that. So you're not going to keep adding new investments in EV at the same rate as what you were doing as in the last 2-3 years. So EV, yes, we need to do that. ICE, we've already done that. We now need to only spend incremental. Hybrid will decide what we have to when we have to.
Okay.
So as of now, you don't see your EV pie growing. It stands at 75-25% ICE to EV.
Right now we have a very negligible EV presence, so we hope to get it to 25%, which is not a small volume.
Sure.
On your base, it'll be very large.
Yeah, so it's not a small volume. So, but we believe that that's likely to happen because the products will really be very, very strong offerings.
Okay, so last question. It's August now. By now, the Diwali Dussehra planning must have started at least at the OEM level. This would be based on the feedback, inventory levels, and the things which you're getting from your dealer network. What is the sense for Diwali Dussehra? Good, better than last year, bumper, flat? What's the initial sense?
The first two options are easier to answer, and the bumper doesn't mean anything. So, good and better than last year.
Okay. You know, by the way, Mahindra & Mahindra also has two-wheelers. Yeah, they have two-wheelers. एक दिन आएगा जब ऑफिस टू व्हीलर पर होगी.
Well, I've gone through that phase too.
All right, looking forward now to the Thar Rocks launch as well on the 15th of August. Thank you for joining in and coming by to our studios.
Pleasure to be here. Thank you.
All right.